Welcome to The Successful Pitch, where we interview startups who have received funding as well as investors who share their criteria for what makes a winning pitch. With your host, author, and funding strategist, John Livesay.
Today's guest, Chris Camillo, is the CEO and co-founder of TickerTags. Chris wrote a book called Laughing at Wall Street and tells the story of investing $20,000 and in 3 years making it into $2 million. All about analysis of meaningful information before the Main Street knows what's going on. So if you get information on trends, like the hot new Christmas toy, for example, then you would know to invest in that company before the stock would go up. He has an exciting new company, TickerTags, which helps monitor conversations. He himself looks at 15,000 tweets a day to see what the trends are, if you can imagine. So he's automated this process, and anyone who listens to the podcast can be invited to use it for free as a beta customer this year. So that's an incredible takeaway. I think you're really going to be entertained and inspired by Chris's success. And he said, most investors today are entrepreneurs like myself, not bankers. And we really want you to be upfront in your pitch about the hurdles you're facing. Enjoy the interview. Welcome to the Successful Pitch Podcast. Today's guest is Chris Camillo, who is the CEO and co-founder at TickerTags. Chris has an amazing story, starting with writing a wonderful book called Laughing at Wall Street. In 2006, he was able to leverage social media analysis to invest $20,000 in the stock market, and in just 3 years grew it to more than $2 million. That's an amazing story of success. Obviously, he's been covered in Forbes and Business Week. Besides doing that, Chris was involved with eCarList and True Linksware. He really is an expert in turning social conversations into market insights. Chris, welcome to the show.
Thanks. I appreciate you having me on.
I just want to take a minute and take our readers back to what inspired you, even before you wrote the book, to get involved with high tech and your first startup.
Well, yeah, I guess you have to go way back, way back. I graduated from college, moved to LA. I was in the film business for a little while, and that didn't go as well as I had hoped. It was 1999, and all these people were starting, .com, what we called them back then, right?
Oh yes,
.com businesses, and I just wanted to be part of that. So I kind of said goodbye to my kind of aspirations to be a film producer, and I got involved in a startup at age 21, I think it was. And I never left. I got the bug, and I think my entire career has been in startups, and each startup I've had more accountability, responsibility, and a greater equity piece, right? Leading up until my last startup, which is eCarList, where me and my co-founders own the entire platform, and now TickerTags, which is again a new startup of mine, where me and my co-founder started and own the platform. So it was a 20+ year experience, but we're finally there doing it for ourselves now instead of doing it for others.
How great. I love that your first pivot was before you were 21.
Yeah,
I think
I've been like an entrepreneur since I was 11, so it seems like I'm way older. I feel older than I am.
Well, tell us a little bit about this fantastic title, Laughing at Wall Street. What were you able to do with data that allowed you to take $20,000 and grow it into $2 million?
Yes. So when I was a kid, I had read a book by Peter Lynch called One Up on Wall Street. And it was all about, he was one of the most famous, I guess you can say, mutual fund managers of all time who ran the Magellan Fund. Mm-hmm. And a lot of his investing was based on hanging out at the mall with his wife and seeing which stores were crowded, which products were moving. I realized early on that on Wall Street, or investing in general, it's all about information. So much of life is about information and capturing meaningful information early and doing something with it. Wall Street that's certainly the case on Wall Street. So, if you are able to identify information that's meaningful to a publicly traded company before the general public or Wall Street is able to identify that information. That's the best way for an ordinary person like myself or anyone else that's not necessarily a financial analyst to do well in the market, right? Because we can't really compete with in terms of fundamental analysis. There are thousands of intelligent analysts out there that crunch numbers every day. If you think you can do that slightly better than someone that's been doing it for 25 years, Harvard, Wharton graduates, these are smart, right? I mean, how much better could you possibly do that?
Right.
The one thing that you can do better is learning how to see things in your life and then associate those things to investment opportunities. Because, Wall Street spends a lot of time researching ordinary people, right? Conducting market research. We're living the research, right? They're trying to get inside of our heads. So the research that they conduct, there's a lag in how long it takes them to understand if a product is trending or if there's a cultural movement that could impact one or more stocks. I realized early on that I could do that myself. And where Peter Lynch had to actually see physical people walking in and out of stores, because our generation has Facebook and Instagram and Twitter, I have access to all the world's conversations in a way, and I could read into them in real time. So it's limitless as to what we can detect if we know what to look for.
Right.
And so I developed a methodology around that. I call it social arbitrage investing. And I just try to find things that would be important, either positive or negative, to publicly traded companies that haven't yet been digested by Wall Street. And I do that. I read 15,000 tweets a night. People don't really believe that. But for the past 3 or 4 years, I've been reading or scanning, I guess you can say, 15,000 tweets a night, just trying to get a sense of what's happening that could be impactful to companies. And I developed a great methodology around that. It's actually very easy. It's something that anybody can do. In 2010, I became the world's top-ranked self-directed investor for turning 20,000 to 2 million. It was audited and being tracked by a portfolio monitoring service. That's when I got a little bit of publicity, and I had an opportunity to write a book about it. And I did. It's called Laughing at Wall Street. And it's about how any ordinary person can overachieve and really do things that even professionals can't on Wall Street.
Chris, can you give us an example of monitoring either the tweets or the trends, positive or negative, of a specific company and how you were able to buy that stock low before it went high or sell it when it was high?
One of my favorite examples I think anyone can relate to, and it's not necessarily just tweets, but just monitoring the web and blogs and what people are talking about. In 2011, the top selling Christmas toy of the year was called the Leap Pad. It was like an iPad for kids. And it was made by a company called Leapfrog, an educational toy company that really hadn't produced a hit product in 10 or 15 years. So in the fall of that year, I think it was late September or October, a lot of the Wall Street analysts and journalists had discovered that this was going to be the hot-selling product of the year, called the Leap Pad. And they all wrote articles and analyst reports talking about how it was going to be huge for the publicly traded company Leapfrog that made this product. So over the course of about a month, the stock doubled. So that's great. But what's interesting is a full month before anyone on Wall Street started talking about this investment thesis, there were a couple hundred mommy bloggers who were the first people in the world to actually receive the product. Well, those mommy bloggers were the people that started the conversation of this is going to be the hot selling Christmas toy of the year. So if you were able to come across that information when mommy bloggers were talking about it, 3 to 4 weeks before anyone on Wall Street had even knew what a Leap Pad was, right? You could have purchased that stock well in advance of that 100% move when the street started talking about it, right? So it's all about, figuring out when the kids or the mommy bloggers or just the ordinary people are starting to talk about something before the financial analysts and journalists and researchers catch wind to it, right? And that was one of my favorites.
That's a great example. And it really goes back to what you said earlier, which is compiling meaningful information before anybody else gets it is what gives you the leg up. I think that's a great tweet. Compile meaningful information before anybody else.
Yeah, and listen, I like to say that, all change is detectable, right?
Oh, that's even better.
All change is detectable. You just have to learn to see things that are happening, and you have to know where to look, right? So that's why now we're working on this this is really the most exciting project of my life. We've been working on it for 2 years, and we literally launched it this week. It's called TickerTags.
Yes.
And we have built a database of 300, and we call it a taxonomy of 350,000 tags. A tag could be a product, a brand, a person, a place, a cultural movement. Like gluten-free is a tag, right?
Right.
So gluten-free is a tag for every company that either makes gluten-free products or makes products that could be harmed by the acceleration of the gluten-free movement. So in the case of gluten-free, that's one of 350,000 tags that we track on Twitter. So we allow investors to monitor social conversations around that tag. So you can monitor, are more people talking about that tag today than today a month ago or 3 months ago or 6 months ago? Is the level of conversations accelerating or decelerating? And are people talking about this thing in a more positive or more negative way than they were in the past? That's what TickerTags is. So TickerTags essentially allows you to do what I've been doing for 10 years manually and what Peter Lynch did 25 years ago manually. It allows you to actually automate it and see more, right? Rather than doing a one-off here or there, you can actually look at hundreds of thousands of products and brands and people. Literally, Kevin Spacey is a tag for Netflix, right?
Oh, right.
So he's the lead actor of House of Cards. And, God forbid, if Kevin Spacey were to get hit by a bus tomorrow, how are we going to find out about that as investors? Because that's certainly a negative thing for Netflix.
Sure.
Are we going to wait until CNBC, announces that and then Netflix stock starts to drop? In our world at TickerTags, since we monitor Kevin Spacey, we know what the normal level of tweets is every minute for the word Kevin Spacey. So if the word Kevin Spacey starts to accelerate, within 60 seconds of people tweeting, he got hit by a bus, I just saw it, here's a picture of it, and people are going crazy on Twitter, we will actually capture that acceleration in social chatter. And within a minute, investors of Netflix can see something just happened to Kevin Spacey. I don't know if it's good or bad. Let me look into it. But something's happening here. Rather than waiting for humans, journalists in this case, to connect dots, curate that into a journalistic story, blog, news report on CNBC, whatever, which takes, as we know, 10, 15, 20 minutes, right, for that to happen.
Sure, because they have to make sure that he is in fact hurt or dead before they go online. They need confirmation. And in the world of stock investing, seconds, let alone minutes, are huge because stocks go up and down based on rumors and all kinds of stuff. So the fact, if you have that information even 30 seconds before it hits the mainstream media, you can adjust your investments accordingly. Is that accurate?
That's right. And sometimes it's a few minutes and sometimes you have weeks in the case of that, right? I mean, literally the mommy bloggers were talking about it for weeks and weeks before the first financial journalist saw that and then was smart enough to connect the dots and write a story for the investment community saying that this is going to be a big deal for Leapfrog, right? So we try to build those associations in advance. So when things happen, you're able to see it in real time. So when the Cuba embargo gets lifted, we had the word Cuba in the tag library for a South American airliner called Copa Airlines. And so in real time, you saw the word Cuba accelerating on Twitter, and we showed you the companies that would be positively or negatively impacted by Cuba. So it's such a fun time to be an investor because for the first time, information, we're really democratizing information for ordinary people. It's no longer, Wall Street that has this information. I have to wait for them to give it to me after they've already traded on it. Now, ordinary people like us can see things on Twitter and Facebook and Instagram in real time, and in many cases beat the professionals to trading on it, right?
You got to love that. One of the things that's interesting to me listening to you talk about ticker tags and this whole phenomena is it's a very similar metaphor because angel investors and VCs are trying to anticipate the next big trend on how they decide which startup to fund or invest in. They want to find that little needle in the haystack of, I think this is going to be big, and this founder has figured out something, and if they have it based in any kind of research that validates their premise, then I want to jump on that, whether it's something disruptive like Uber or just tweaking something to make it better. It's fast.
You just talked about TickerTags 2.0. Like they can monitor cultural trends and the startups that are positioned to benefit from those cultural trends or trending topics or whatever it is that people are talking about that's happening in our world. They can see the companies that would benefit or be harmed by those things that are private, not necessarily public. But that's latest here.
And when does 2.0 come out? I'm so excited for you.
In the fall, we're going to be announcing that probably right around the September timeframe. We're working on it.
I'm sure. Well, it's so fascinating to me that just was organic analysis, and then you're working on it. See, there's a great example of something making sense when you do product extensions.
Absolutely.
Who is your ideal target for ticker tags now? Is it the investment community that wants to tag, or is it other people, the individuals? I said you're solving your own problem of having to analyze 15,000 tags a night. Is that who you're solving the problem for, the investment community?
Yeah, so I'm a self-directed investor, and I built TickerTags for myself. So other self-directed investors, we certainly can benefit from using TickerTags. At the same time, we're talking to large investment banks, institutions, quant funds, hedge funds, professionals, any investor of publicly traded securities, and in the future private companies as well. Will have to live on ticker tags. I mean, you can't ignore the social data that's impacting these companies. So one thing that's interesting about ticker tags is we're building it as an open, public, free taxonomy. And it's crowdsourced, so anyone can contribute to the taxonomy. So if you're on our platform, you're like, this is great, but you guys should really add this tag for this company. You can suggest tag additions, and we'll curate them into the tag libraries. But it's completely free for the world to use. The only thing we charge for are private tags. So, we have a tag library for Disney. And one of the things I'm trying to figure out this summer, because I'm a Disney investor, is theme park traffic up or down at Disneyland, Disney World, Epcot. So I'm tracking those conversations around those words, Disneyland, Epcot, Disney World. But those are public tags. Anybody can see that, and anybody can monitor that through our platform for free. But there's some private tags that I thought of that are more intricate than public tags that I've added, like Disneyland in association with the word crowd or line. That would be Disneyland plus crowd would be the tag. And that's proprietary to me. I guess no more because I'm talking about it, but that's proprietary to me. And anytime someone tweets, God, the lines are so long today at Disneyland, or wow, Disneyland's really crowded this morning, we could see if those conversations with those words are happening more often this summer than last summer or less often, right?
Right.
Which is a great social signal to help us try to figure out, is Disneyland having a good summer? Is it more, are they selling more tickets? So we charge for private tags, but the public taxonomy, which is huge, is completely free. The more people that use it, the more people contribute to it, like Wikipedia, the smarter it gets, and the better it is for everyone. So, and the cool thing is we're in beta all year, and anyone that signs up for our beta actually gets private tags for free too.
Oh my
this
gosh.
year. So the whole thing is free this year.
Wow. So eventually that's how you're going to make your money. You're going to monetize it through the private tags. Is that what you're?
Yeah. And as you could imagine, the quant funds and, the institutional users really want to develop these private libraries that are proprietary to their firm or their fund. And they'll think of their own things like Disneyland plus line. They'll have lots of their own private tags, and that's how we monetize the platform.
Fantastic. Now, have you had to pitch this concept to get users, or to pitch this concept to get investors? Where are you in that stage?
Yeah, so I think we've raised $1.5 million in a seed round recently. we self-funded the company initially, and we just raised $1.5 million seed round.
Congrats.
We're in the process of raising. Thank you. Listen, we never done that. I have never done that before. Our last company was founder financed. We exited to a publicly traded company, and it was interesting to have a real bootstrap company that we never had to deal with outside investors. But TickerTags, we're trying to do this a bit larger. We're doing a very large A round right now. We're in the middle of. My process for TickerTags has really been first establishing myself as a thought leader in this niche that we're in, social investment analysis.
Right.
This is my life, right? And I think that's been a big part of my success in being able to raise capital is I did this for myself. I had a big track record in social arbitrage investing. I wrote a book about it. I speak about it regularly. Every few weeks, I'm speaking at a conference. So TickerTags for me was a natural extension of my thought leadership on the subject and what I thought the industry needed. So there's a high degree of trust there, and that's helped a lot.
We just need to pause for a second because that is extremely valuable to the listeners. If you want to get $1.5 million in a seed round, you must establish yourself as the thought leader of why are you uniquely qualified to take this idea and run with it? That's what the investors want to know, more so than even the idea, because you might end up pivoting. They need to know why and you've done an excellent job from your book and speaking and all the social media things that you do to really establish why you as a thought leader. And I loved your insight on this. Does that give the investors confidence when they're looking at the barrier to entry to any potential competition that might come for TickerTags? They don't have you.
Yeah, it absolutely does. I think by the way, I'm an angel investor as well, so I kind of play both sides. And I think most early stage investors will tell you they're investing in two things. They're investing in a concept that they believe in, but they're also investing in people they believe can execute on their vision, right?
Yeah.
And that's almost important because usually there will be competitors, and you're really investing in the team that can execute on the vision.
Yeah.
And also the team they believe will have the ability to continue to raise money as the company needs to raise funds, because they will be the A-list team for that, whatever that niche is, whatever that product category is. We like to believe that we are that team for this niche. When we're raising money for a larger A round now, we're going to our potential customers and our partner companies. So the larger Wall Street firms that are talking about partnering with us, the larger funds that are going to be our first clients, they are also our investors. If you have a product that truly makes sense, and I'm a huge fan, just a huge proponent of crowdfunding in general. I don't know that we'll crowdfund TickerTags necessarily, but we kind of are in a mini way by taking these institutional clients and partners of ours, and they're the ones that understand our story better than any traditional VC firm, because they get the value, they see the value in it. Obviously, they should want to invest, right? Because, and I think that's really important. I truly believe that when you have a concept that truly makes sense and you have the right team and you're executing, the investment piece flows so naturally, people will push you to it. We're having people inquire to invest in us daily because the story resonates with them, and they've taken meetings with us and they believe that we're the right team to execute. And then the investment, you don't even have to ask for investment. I think the investment, comes up naturally in those conversations.
I use the analogy of landing an airplane. It's like you know where you're going to go, and it's natural as well. Now it's time to land. It's time. But the fact that you're able to get your new customers to also be your investors, that's the most proof of concept that anybody could ever hope to get.
I think it's important, and I think every entrepreneur should go into their should plan to raise money from their customers. Whether they do or not is ultimately wrong, because a VC could always step in, or a big investor can step in and make things easy for them. But in the back of my head, I always knew that worst case, I would have thousands to tens of thousands of self-directed investors like me who would see the value in our platform. And if I have to, I will just crowdfund this, right? I will crowdfund it with people putting in $500 to $2,000. And I'll raise 2, 3, 4, 5 million that way if I have to. Because if you have a product that resonates, someone has to buy it, right? Whether it's a service, platform, someone has to use it or buy it. So those people should be willing. And fortunately, now the laws have changed the last couple of years. We're not quite there, but we're getting close to crowdfunding. It's not as easy or as inexpensive as we'd like it to be, but certainly over the next few years, crowdfunding is an actual option for entrepreneurs. And as long as you can get 1,000, 2, 3, 4,000 customers or theoretical supporters of your product or brand, go to them, right? Go to them. And here's the funny thing: you don't have to raise 2, 3 million from those people. If you can raise a decent amount of money from a couple thousand prospective customers or users, take that to an angel investor, take that to an early stage VC firm and go, hey, because we're always trying to figure out, well, is your product really going to resonate? I mean, are you going to be able to get traction? If you can show us that you have hundreds or thousands of customers who have invested $2, $3, $4, $500 each in your platform, that does the vetting for us as early stage investors. That's what the real investors want to see.
It's the ultimate traction, isn't it? It's the ultimate proof of concept. I think the ideal tweet is when your customers become your investors, you've got traction.
That's right. Then you really have customers. You have more than customers. You have investors for your product, and that's what we want.
Right. It's like the people who first started falling in love with Starbucks, for example, and said, "Oh my God, I love Starbucks. I see the line. I come every day. I'm going to buy the stock." Right? They become customers and investors on a much bigger scale. Let me ask you, Chris, since you're also an angel investor, did you get asked any questions during your pitch for the seed round that you weren't anticipating, or that you thought, "Oh, thank God, I have an answer prepared for that"?
You know, it was a fairly easy seed round because all of my investors knew me and knew my track record. So it was fairly easy, but a lot of them did ask, barriers to entry, competition. And there is, listen, my investors send me articles every few days with another social. I just read this company in the journal. Are they a threat to us? And in most cases, those are our potential clients. And I know the founders of a lot of these. So investors are constantly worried that there's someone else out there that's already doing what you're telling me you want to do, whether we know them or not. And they are better, they're bigger, they have more money behind them, they're smarter. Whether they say it or not, that's what they're thinking. That's what I think, right? When I invest in a company, I'm like, I invested in a real estate startup, and I started to do vetting on the technology, and there were like 600 real estate technology companies and startup. It's just amazing how many startups there are today versus 5, 6, 7 years ago.
Oh yeah.
It's so easy to start a company, right? That's why execution is so important.
Execution. Well, I love what you said, because that unspoken question that an investor has is key for founders to have in their head. So answer it during your pitch. If you only have 10 slides in 10 minutes, address that issue so that they don't leave with that question or don't feel comfortable asking you the question, or certainly be prepared to address what the barrier to entry is a very key factor, because everyone is assuming in their head, well, TickerTags is going to be Uber versus Lyft. Right?
Yeah, exactly.
Right, you're either one. You're good.
Address your hurdles, and I'd say transparency is key. When I have someone who's pitching me and they're very upfront about the hurdles the company has and the competitors, and they're like, these are all of our competitors, and I always tell someone, if I find a competitor that you haven't told me about and that you don't even know about, that's a huge red flag for me, because it tells me that you truly are not the thought leader expert in your space. You should know everyone in your space, right? You should know them backwards and forwards, not necessarily to do what they're doing, but you should be so entrenched in whatever your little vertical is that building that you're living and dying that vertical, right? Like I am so entrenched in my little in my world. If I find out about a conference that I haven't been invited to be on a panel, calling up, I'm like, hey, I'd love to be on a panel. I'd love to be part of this. I want to be on everyone's radar that is touching the space that I'm in, and I want to know about everything. If there's a new startup in my space, I want to know who they are, what they're doing. And I pride myself on that. And I expect that out of other entrepreneurs. And I think as an entrepreneur today, you have to understand that most early stage investors were not bankers like it used to be 15, 20 years ago.
That's great.
We're not like financiers. Most of us are entrepreneurs ourselves that have had one or more exits. Now we're still entrepreneurs, but we're also investing in other entrepreneurs. Why? Because it's all we know and we love it and enjoy it. It's just our world. But we have high expectations for what we expect out of others because, we've done it and we're probably still doing it. In the case of me, I'm doing it all over again. Right. And I expect to do all the stuff that I do.
I mean, you've given us so many great takeaways. Most investors today are entrepreneurs, not bankers. We're going to tweet that out. Be the expert in identifying all your competitors, and certainly be upfront in your pitch on all the hurdles you're facing. Those are such great takeaways. One quick last question about, do you anticipate it being very different from the seed round to the Series A that you're going into? Are you preparing any differently? Do you anticipate more people who maybe don't know you as well, or more competition?
Yes, totally different. Totally different. This will be my first A round, so I'm still learning. But it is much different. It's a larger A round. They don't know me as well. The vetting process is different. I'm only halfway through it, so I'm still learning. But certainly, it's still ultimately about those two things, right? It's about proving that you have the right concept and proving that you have the right team to execute on your vision. I think those two things don't change.
No.
A lot of the ancillary stuff, the pain in the butt stuff, she comes in, a lot more paperwork, a lot more people, a lot more conversations.
Right.
But those don't change. And I would like to mention, for TickerTags, anyone can go on TickerTags.com and sign up for early beta access. If you mention the podcast, we do have a wait list, but if you mention the podcast, we'll get you in on one of our first, our next couple of beta invites that we send out over the next couple of weeks. And then also, Laughing at Wall Street is a book that I wrote a few years ago that anyone, I don't care what your background is, what your financial aptitude is, you can become an amazing investor. Laughing at Wall Street, I tell you the stories. It's a book that's very easy to read. I tell you stories from the time I was 11, 12 years old and how I learned to identify trends on the street, and how I was able to associate those trends with investable opportunities. And I think it's a book that people will really enjoy no matter what place in life you're at.
Well, we're definitely going to put the link to your book in the show notes and a link a link to TickerTags. And thank you for your generous offer to let our listeners be invited for the beta. I really appreciate that. And I know the listeners do as well. Is there any other book besides Laughing at Wall Street that you would recommend to startup someone in the pitch world to read?
Yeah, I mean, there are so many. I mean, I think rather than books, I would really just regularly read kind of blogs and just keep in tune with the startup finance space, whether it's reading Venture Beat, right? Just really understanding what type of companies are getting financed, who's financing them. I just love Googling everything from how to pitch to, how to answer certain types of questions, what to expect, deal terms. I mean, it's changing all the time, right? So books get dated almost immediately. So I Google everything. And I'm constantly reading the most current blogs on every little subject related to raising capital.
Great. So how can our listeners follow you? Do they just go to TickerTags.com to be invited?
Yeah. They could follow me at Chris Camillo on Twitter or at TickerTags if they want to follow TickerTags. But either me, Chris Camillo, or TickerTags on Twitter is really the best way to follow us. And I would say sign up for TickerTags. It's open and it's free. So just join the community.
Why wouldn't you? Fantastic. Chris, you've been a great guest. Thank you so much for joining us today.
Thank you. Appreciate it.
Thanks for listening to the Successful Pitch podcast. If you like the show, please go to iTunes and write a review, and encourage your friends to write reviews too. It really helps get the word out. People say that the longest distance is between someone's mouth and their wallet. People can tell you they're going to invest, but when it comes time to write the check, they don't do it. So how do you get people to say yes and then follow through? Visualize yourself on the left side of a riverbank, and you have to cross the river, and on the other side of the river is where the funding happens. So first you make up your idea, then you make it real, then you make it reoccur. Once you start dipping your toe into the water to get to funding, that's where I can help. I get you across that river faster than you would on your own, with a lot less frustration than you will get when you hear a bunch of no's and you don't know why. So if you want some help getting funded faster with less frustration, go to my free funding webinar, sellingsecretsforfunding.com/webinar. Sign up and get in-depth information on how you can get funded fast. Thanks.